Let's look at the annual report of a company and go through it in detail. We have one for Videocon Industries Limited in this case. Look at the balance sheet and the income statement. So you can see the balance sheet is as at a particular date and the income statement is for the period. You can see the balance sheet has current year compared with previous year. There are two parts. One is equity and liabilities, which is sources of funds, and the other is assets, which is typically applications or uses of funds. On the sources side, you can see there are three subsections which include the shareholders' funds, non-current liabilities and current liabilities. On the asset side or on the uses side, you can see there are two sections which include the non-current assets and the current assets like inventories, trade receivables, cash and bank balances, etc. You can look at the income statement, which has got incomes minus expenses, which gives you profit before tax. The depreciation, finance costs, etc. are laid out separately within expenses, as well as the cost of materials consumed, changes in stock in trade, etc. You can see the income statement ends with profit or loss for the period, and finally earnings per share is calculated. Then there comes the cash flow statement, the third most important financial statement. You can see there are three clear sections here which include the cash flow from operating activities, that from investing activities, and that from financing activities. Look at the notes to financial statements. They start with significant accounting policies. There are various schedules which explain in detail different numbers included in the main part of the balance sheet, such as reserves and surplus explained in detail here, long-term borrowings, you'll have short-term borrowings, you may also have fixed asset schedule, etc. There is a lot of additional information which is required to be presented under the respective accounting practices which are generally accepted in a particular region. They are called as GAAPs, generally accepted accounting policies and practices, or they are also known as accounting standards. Look at the last part of the financial statements, particularly the notes, and you can see there is a discussion on the contingent liabilities here. In this case, company has noted that based on the legal advice, company believes that any further sum required to be paid or returnable in respect of a dispute that the company has talked about, it will be based on the determination by a tribunal or a court of law, and the company will provide for such liability only based on certain decision, such decision. So that's what you have here. Look at another example here, which is the letters of credit or special letters of credit that the company avails from bankers, and you can see that amounts to the tune of 69,933 million rupees or almost 70 billion rupees that the company has mentioned in the contingent liabilities section. Just like standalone financial statements, a company who has subsidiaries and is listed is also required to give out consolidated financial statements as well as the audit report to the same, and you can see the example of the consolidated balance sheet, consolidated profit and loss account, and consolidated cash flow statement. The last part of the report contains the notes to the consolidated financial statements. Now these will be mandatory only in case a company is listed and has some subsidiaries. In such a case, the company has to present the financial statements of a group, of the group as such, which are known as consolidated financial statements. So that's it. That's what we have in the form of the entire annual report of the company.